Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome all of you here today. We've got Barbara Armstrong in the chat. We welcome her as well. And we'd like to also say, Gary, hello to you. Jim, Orlando, back from playing in Paris. Mo, Vlad, BJ, and many others. Welcome to all. Now, today we're going to kind of have a little special session on potential entry setups, types. We'll hop into that in just a moment. Hopefully you had a good weekend. We're right back at it. I spent the weekend working on a presentation that I did yesterday, so I kind of felt like I worked throughout the weekend. But hey, another day, right? So what does it matter? So let's go forward. So just real quick as we get started here, remember the information here is provided for general informational purposes only. Also, when we talk about examples, some stocks, some options, if you consider options, remember that options carry a high level of risk and are not suitable for all investors. Also, when we talk about examples, those examples will be done in the paper money software application. And also remember that investing involves risk, okay? Now, today, just briefly, 2 to 3 minutes, want to kind of take a look at where the markets are, where the sectors are. 2 to 3 minutes tops. Next, I want to really take about 10 to 12 minutes. What I really want to do is talk about really potential entry setups that I think many investors maybe might know about, but maybe don't know where to start. I want to talk about kind of when those actually happen, in the order of that, the reasons behind it, the types of trends, and so on. Kind of want to actually, and that, by the way, this was all caused by someone who sent me, went to X and sent me a message and said, hey, I'm taking your kind of what you teach and kind of put it on a sheet for myself. I would like to kind of maybe expound upon that a little bit and kind of talk about why and share with you. I thought it was a great resource. So I thought we'd take a little time to go over that. And by the way, you know who you are that did that, and it was well done. But let's kind of put the cherries on top here today, shall we? Now, and then after that, as we kind of talk about those potential entry setups and what you should be aware of, okay, to be more confident in your trading and or investing, okay? And I'd feel horrible if you didn't know about those. I mean, I just feel horrible. And from there, what we're going to do is we're going to talk about new trade examples from that learning. Let's go ahead and hop right in. So first off, what I want to do is I want to pull up just real quick the SPX. Anything major on the SPX? Nah. SPX down 3. We've had one of the biggest moves in the market that I can remember, okay, at least in a short period of time, okay? I want you to also kind of remember that the SPX, before we went into the election last week, fell down below the horizontal support level. And that's going to be something that we come back to when we talk about potential entry setups. But you're going to see they went bombs away to the upside to a brand new high. Now, here's the nice thing. If your party did not win, that didn't mean that your portfolio could have maybe not participated. So hopefully everyone felt like they were a winner last week. Just trying to make sure everyone gets a win-win there. Now, when we take a look at the Russell, which has been the strongest, and now this is like the worst thing. Like, you know, I woke up at 1 o'clock in the morning. Of course, what do you do at 1 o'clock in the morning? You pull up the Thinkorswim platform on your phone. Just saw the futures up about 1.2%, 1.3%. Who was paying attention? And the Russell has held the majority of those gains. Now, we said this before. When President Trump was in before, we saw the small caps go up 50%. Now, we're not saying they're going to do that again, but someone might be anticipating that maybe the small caps might be a little bit more favorable. Nobody knows the future, but all you can do is trade what's actually happening now, okay, and manage risk. But the Russell kind of playing a little catch-up. Now, we know that the NASDAQ, the Dow, and the S&P led, but right now, kind of the Russell has its foot on the accelerator. NASDAQ down a little bit, and the SOX is also down as well, pretty aggressively. And when we look at, let's say, sectors-wise, okay, IXY, the sector there, bombs away, right? Amazon, Tesla, Costco, right? Netflix, right? Those ones have actually been very strong. We did see a decent move today from industrials, Kitty Cat, or also known as Caterpillar, CMI, among others. And then we saw the financials. We talked about cards, Visa, MasterCard, Capital One Financial, Discover Financial, and so on. Someone is swiping that card like Zorro. Okay? Who's doing it? So someone is, okay? And also when you take a look at utilities, a little bit better move here today from utilities. If you're an income investor, that's been the area that's been softer. A little crossover there, which we're going to come to. And then we say kind of what's happening with the energy space. Energy, remember that we said this. Everyone listening, okay? Everyone listening? You know, are we kind of at the spot where maybe energy stocks, I didn't say commodity, the actual physical commodity of, let's say, crude oil, the CL contract or the QM contract of futures, are we kind of thinking that maybe, now how many of you are thinking that maybe the energy sector stocks might try to break out? This chart is kind of showing a pretty strong pattern of actually trying to break out to the upside. And we're going to come back to this in just a moment. And so I don't forget, I need to write those down, okay? But I think these are two good examples that we're going to bring up, and I've highlighted those, okay? Now, I want to kind of talk about, now how many of you last week saw the moves in the market and you felt very comfortable to take positions and or you had positions? How many of you felt like that? You're like, James, I was on it. How many of you kind of felt like, you know, I wasn't quite sure? Okay, now I'm telling you, we've all been there. Okay, so no one's better than someone else. We all have kind of a little different experience, right? And so someone sent me last week kind of a snapshot of some of the things that I've taught. I want to kind of just take some moments and kind of talk about this, okay? Kind of be a little teaching here. Now, first off, when we talk about markets and like different entries, there are different entries, okay? People have different viewpoints and they look for different types of things. Those different types of things could be different indicators, right? Now, what I'm going to do is I'm going to put this in order. In other words, if someone was brand new and they said, which entry setup might I practice on first? Well, number one is the one we'd probably focus on is the relative strength, okay? The relative strength, we label that as RS, and we're looking at the 5, 10, 21, 42, and 63. Now, if we said, for example, now, by the way, when we say 5, we're talking about 1 week, 10 days, 2 weeks, and so on. 21, 1 month, 42, 2 months, 63, 3 months, okay? What we're really trying to find, now, when I say trend, what are we saying? We're trying to say trend 1 through 5, okay? Now, if we were looking for a stock that is bullish, what type of trend are we really looking for? 2 3s and maybe 4, maybe. But that better be something that's in a continuation pattern. What would be a continuation pattern? Now, by the way, if you said, I don't even know what 2 is a stock above the 10-day exponential moving average, but not the 30. So first signs of bullishness. Trend 3 is the price above both moving averages, the 10 and the 30. 4 is the stock above both moving averages, but might be at an area of resistance. And if you're buying a stock up at resistance, you got to think there's a continuation pattern. What might be that continuation pattern? Probably the two most commonly used is probably the ascending triangle and that cup and handle, baby. Okay, now that's not, it's no cup and handle, baby. It's just cup and handle, okay? But some of you really like that pattern. Now, what's a resource that we really use to do that? Well, that's really found on the Market Watch tab, and it's underneath quotes, okay? Now, what is the reason behind this? Well, we're trying to find something that's outperforming, okay, outperforming maybe an index, and it could be a sector, etc. Okay, we're trying to find where big money is flowing. Okay, where's the cheese flowing? Now, that relative strength really comes from a tool that was used over 25 years ago, and it was called the big chart. Okay, so that would look like as follows. Okay, so if someone said, James, I'm brand new, I'm just getting started, I feel a little overwhelmed, maybe where might I start in learning about these potential entry setups? This RS 5, 10, 21, 42, 63, this is a great place to start. Okay, now you might be kind of wondering, is there a specific class that you've taught on that very topic of how do I actually apply those? How do I use those and read those? Good question. Let me think to myself. Self, what think you? Well, the one thing is you could go right to the YouTube website, go to youtube.com. You could just type in Trader Talk Schwab Coaching Webcast, and that's going to find our channel, okay? So go to youtube.com, type in Trader Talks Schwab Coaching Webcast. You'll see this page. Now, if you have not subscribed yet, you're going to see where it'll say subscribe. Subscribe does not mean you pay. It just means, hey, you can follow for free, and it has all of our content right on our page. Now, when you subscribe for free, you're going to notice that right in the middle of the page, home, videos, live, playlist, community, and there's a little icon. Click the icon. So if you said, hey, is there anything on here about relative strength? I'm not going to type anything more. So there's a little icon. Now, what that icon does is it goes back over all of us instructors and says, who taught something on relative strength? Let me click on that. And let's see what we got. Oh my gosh, the first thing that comes up, customizing relative strength. And if you go down a little bit more, okay, I even talked about it in terms of a fundamental perspective with technicals. And also you're going to see that when I go down to the next one, relative strength percentile. So there's 3 of them right at the very top. Now you won't see them if you don't subscribe. So you subscribe for free. So pretty simple thing to do there. Just go for it, okay? Take that entry. Now, what I want to do is I want to go back to this. So when we talk about the relative strength, we are trying to find the relative strength, okay, in what? In markets. We're trying to find the relative strength in sectors, in industry groups, and stocks, okay? Now, I'm not talking about any other things like currency. I'm not going there, okay? Would be interesting, but we're going to leave it to this. So we're trying to find where's the money, where's the strength in the markets. What markets are the stronger? We already said the Russell, okay? We already said the S&P, the Dow, and so on, and fourth, NASDAQ. What sectors are strongest? We already said the discretionaries. We already said financials. We already said keep an eye on energy. What industry groups? Keep an eye on retail. Keep an eye on, let's say, biotech, okay? Some of those healthcare stocks firing back. And what stocks in those sectors and or indexes are driving the performance. But this would be probably the first thing that we would focus on in saying, James, I want to try to focus on where there's relative strength. Now, the fallacy with this is that people think that just because it's up, it can't go up higher. I have tried to break down that wall in people's minds that just because it's up, it can't go higher. That's like saying if it's down like Walgreens, it can't go lower. Losers can keep losing. Winners can keep winning. Just ask the Kansas City Chiefs, okay? Now, what if I bring up the second one, okay, which is, I think is a very easy visual way to see this, okay? And I said this last week. We're looking for the price above the 10-day EMA or, okay, whole. Now, why do we want that? Well, we want to find momentum. We said that was the foundation of every trade that we look at if we're talking about bullish. What type of trade are we looking for here? 2s and 3s and 4. Where do you see that? Well, we could see that in the same place we saw before, is on the Market Watch tab and on the quotes. And the whole goal there is to find momentum where price pullbacks, okay, could be shallow, okay? When they pull back, is that pullback, okay, less than 3 days? Now, I want to go back to one of the examples we talked about from before. This is a small company called Autodesk, okay? Autodesk. Now, what you're going to notice on Autodesk, it recently broke out of diagonal resistance. The stock went to the upside. And what you're going to notice is it went down for a day, only to shoot up again after just one down day. Now, ladies and gentlemen, boys and girls, we've always said this, okay? If you pull back less than 3 days, and then you see the stock doink back to the upside, that is a classic sign of momentum, okay? So if the price goes down less than 3 days and stays above the 10-period moving average, whether it's exponential or whole, whatever you use, that's a strong sign of momentum, okay? Now, so this one, again, foundational. That would be probably number 2, okay, that we would be looking at. This one I'd probably say is a little easier to start with. Start with something where you're looking for institutional money that's driving potential outperformance. Now, if you found something like that, does that probably mean that the stock is above the 10? What think you? Yeah, we would probably say, look, if we found relative strength, does that probably mean that the stock is probably above the 10? And we would say, yeah. Okay. Now, I'm also going to bring up here the whole 10-20. Now, don't worry, we use this. And I think this is a great visual tool. These are green and red lines. Okay. So if someone said, James, I'm learning about different entry types, okay, and what to focus on, okay, what am I really trying to look for? Well, same thing we looked for previously, 2, 3s, and 4s. And where could you see that? Okay, it's going to be in the Market Watch tab and quotes. Okay, and what we're trying to do is we're trying to focus on timing. Okay, we're trying to focus on timing, and we're trying to see shifts in momentum and trend. Now, I got to get to a trade example. I can't take it any longer, okay? I can't take it any longer. I want to go look at, just real quick, Berkshire Hathaway. Let's take our first trade example, okay? Tell me what you see on this chart, okay? Now, Chris, you already beat me to it, Starbucks. But if you saw my post from earlier, I beat you to it. Maybe I did, okay? So I did post about Starbucks. Not a recommendation, but I did post about it. So if you look at, let's say, Berkshire Hathaway, let me kind of show you what I think is helpful, whether someone's beginner, intermediate to advanced. When we have these red lines, it's pretty simple to kind of see what's going on, okay? So this shorter term moving average, right, being the 10 period, that one being the 20. If we get a red line on the 10 period moving average, we know we have negative momentum. That's not great, okay? If we get the 20 period moving average to also go red too, we call that the trend is down in the shorter term. Okay, so let me flip this. If we see the 10 period moving average go from red to green, bullish short-term momentum. The opposite, red to green, green to red, that would be called short-term bearish momentum. 20 period moving average, red to green, turning up, bullish short-term trend, okay? If we then go from green to red, got it right this time, kind of seeing the trend bend down in the short term, kind of negative, okay? And here's what's kind of nice about this, okay? If you look at those red lines, red line, red line, red line, red line, it's pretty easy to say there ain't a whole lot to look at besides it's being hammered to the downside. Now, if all of a sudden that 10 period moving average starts to go green right there, this is the first sign of any type of bullishness at all. And then the confirmation would be, let's say, the crossover or the 20 period moving average going green, whatever comes first. If you get a big update, okay, you get a big update like this, you could get the 20 period moving average to go green and the crossover on the same day. Now, what you're going to notice is we've kind of gone up and we've kind of started to make a higher plateau of support. Like where? Well, notice what you're going to see in this case is that support area is probably right around where that 10 period moving average is, right about 459-ish. Now, what you're going to notice is we only went down for one day. The very next day, we went up. We closed higher than we were open. We closed higher than the previous day. And the very next day, what happened? It gapped. Okay? Now, if we can close higher than that red candle high, that would be what we call hold. Now, our first trade example on Berkshire Hathaway is, could this stock maybe try to swing back to the upside? Now, with Berkshire Hathaway, okay, we could look at the relative, we could bring up a list of financial stocks on the Market Watch. We could also put the financial sector at the bottom or an industry group. Sure, feel free to do that, okay? But if we look at this, we're going to take a bullish trade and we're going to set a stop. This is a stock trade, okay? So what we're going to do in this case, let me pull back up that paper money account. We're going to type in Berkshire, the B shares, of course. We're going to right click on the chart, buy custom. I'm going to go with OCO bracket. Okay. Now, what we're going to do is we're going to set that stop right underneath the 10-period moving average. Okay. That 10-period moving average is at 459.47. 459.47. Let me slide that over. Less 2%. And we're going to have a stop right at 450.28. Okay, now let's stop for just a moment, okay? Now, the thing is, you do not need all the tools in the world. You need kind of some tools that you feel good about, you understand, and you trust and you practice it. So number one is, does it have relative strength? Okay? Number two, is the price above the 10-day moving average? Is the price above, maybe if you use the whole moving averages? These are all three solid ways to find trends and momentum. Now, not everyone's going to choose the same. Could someone use all three of them if they felt comfortable with them? Yes. Okay. Now, what we're going to do in this case is I'm going to go back 450, okay, 28. Now, by the way, in the paper money account, does it use all those three entries first off? The answer is sure. Okay. Yes, it does. Okay. Now, the target, when we go back and look at that target, where might it try to go to? Oh, we're going to try to shoot for maybe this prior high. Now, I'm not going to take it the very high of the high of the high. We're just going to try to say maybe about 482 and change. Okay. So 482 and change. Now, what I'm going to do is go dated GTC. Now, for the time's sake, what I'm going to do is I'm also going to go down to the dollar amount. Let's say we could put in at most $15,000 just for time's sake. And said, how many shares is that? It's going to be about 31 shares. I said, don't laugh. I said that. I said, don't laugh when we buy 30 shares. And some of you I heard laughing. I'm joking. I couldn't hear you. Okay. But Netflix, we bought 30 shares. Okay. And those 30 shares, what you're going to notice is purchased right at 700 even. And Netflix with 30 shares, it's just made a couple dollars. Okay. Some people wouldn't maybe bend over and even pick that up. But the paper money account will, $3,000 saying spank you very much and adding to that total portfolio. But who's tracking? Now, so don't think that if you only buy 10, 20, 30 shares, it can't make anything or lose anything. That's not true, okay? And we've shown that multiple times, okay? Confirm and send. Remember how the stop works. If it goes down to that price or less, it triggers the sell. This does not say where it's going to fill. Yeah. Michelle's right. Netflix is still rocking. That's a true statement. Okay, it is still rocking. We need to move up the stop. We're going to now send the order. Okay, now I'll fix that, but that's going to be in the IRA account. Now, what I'm going to do is I want to go back to, so I want to imagine if someone said, hey, James, potential entry setup number 4, right? We're going to kind of label this as really like the hold or the CHE close higher gap. We just call this a bounce entry. When we say a bounce entry, we're really talking about short-term bounce entry in that trend. Now, I don't want you to think that we're talking about something completely different. If we saw a stock that had relative strength, if we saw a stock above the 10-day moving average, could that be hold? Yeah, it could. But what we're trying to do is get the bigger picture right first. And then we're trying to nail the timing. Okay? Now, I want to kind of say one thing just real quick with the whole before we move on. The whole moving average, you can actually have that timed. Okay? You can have it timed on the market watch or charts. So if you said, well, James, I kind of need help seeing it. Okay? Well, if I pull this back up for just a moment, and I go back to market watch and I pull up, let's say, a list of Dow Jones 30 stocks, how could the tool help you? Well, this tool all the way over here to the right where it says 10HC, whole counter. It's counting the number of days that the moving average has been green or red. And as you expect, the 20 is the same thing, okay? Now, so if I looked at this and said, hey, what stock is in the Dow that is kind of the earliest sign of, for example, getting, let's say, where both of them, I should say, okay, are kind of in the zone of maybe pretty early. Well, what you're going to notice is stocks that are pretty early would be PG, okay, that would day 1, day 2, okay? 1 day, 20 period moving average, 3 days on the 10, okay? You're going to see NVIDIA in the same ballpark, 4 days on JPM. When you look at, let's say, Triple M, 2 days up on the 10 period moving average and 4 days there. So what the investor might be looking for is they might be saying, James, I feel late if we go in CRM now and it's been up for 10 days in a row. Well, that begs the question. Where were you on the day 2 or 3? Where were you on day 4 or 5? I mean, you got to ask the question, okay? Now, so this is kind of helping us kind of get a sense, are we early? Are we a little deeper into the trend? And so on. Now, how do we know that if it's lower on the day count, how do we know that it could actually turn into something like CRM? If you ever figure that out, let me know how you do. Nobody knows that, okay? Just like a baseball batter, when they go to swing, they don't know if they're going to hit it. It's all probability based, okay? And that probability changes over time, but they're going to try to keep swinging when they see those entries, okay? The other place that we can see this, and I'm going to share this chart with you, okay? And some of you might like this. Now, I would not look at this on a daily basis like this, but if someone said, James, I want to kind of help see the timing of this, this is really just showing us the counter, but just on the chart. And all these things are kind of to help us recognize what in the world is going on. R is red candle, red moving average down for a day, down for 2 days, down for 3 days, down for 4 days, down for 5. And now what you're going to see on this case is when that 10 period moving average goes green, 1, 2, 3, 4, 5, and so on. So it's kind of giving us the visual of what that column was showing. And it is kind of helpful to kind of see both, okay? I'll share that in just a moment. Now, so the one thing is, the first trade example we did was Berkshire Hathaway, okay? So this could hold if we said, well, what type of trend are we really trying to look for? Trend 2, 3, and 4, okay? Trend 2 is when the stock pokes its head above the 10-day moving average. It's the first sign of bullishness, okay? The resource, we could see that on the Market Watch tab and the quotes. Sure, when I say Market Watch tab, underneath the quotes, yes. But we could also see this on the charts. And on the charts, that's going to be what's called that green dot, okay? The green dot is going to be showing us, confirmed, by the way, script's not guaranteed for accuracy, but what that green dot is really showing there is a potential hold setup. What is the reason for doing that? We're trying to capture a short-term entry, okay, in a existing trend, okay? Now, here's the deal. Could you just say, James, I'm looking for a stock above a 10-day moving average? Yes. Could you, if the stock is a 10-day moving average, could you look for a stock that's showing gold and then try to get in? Yes. Okay? That's the idea. That's why I kind of said that these two things up top, they're foundational. If we can get the relative strength and the price above the 10, which most likely go together, but there's some differences in teaching, that would be helpful to find these other things. Now, 5, okay? Now, this is where the market is right now. 5 would be like stocks at highs, okay? And when we say highs, I'm also going to include here maybe breakouts. And these breakouts could be horizontal or diagonal, okay? Now, when you take a look at these stocks at highs, breakouts, horizontal or diagonal, it still goes back to 2s, 3s, and 4s. So when you have a market that, if I pulled the Dow Jones and said, hey, if this was the list of stocks we were looking at, how many stocks are in trends 2, 3, and 4? And the answer is, survey says, there's a lot of them. What does that probably mean for a bullish investor? There's lots of entry setups, okay? Now, on the Dow list, is this every stock at 2, 3, 4? No. There's some stocks that are not doing as well. Okay. Now, what I want to do, let's go back to that sheet, and then we're going to look at, let's say, Starbucks. So if you said, James, I'm brand new, I'm intermediate, I'm advanced, I don't care where you are. I don't care where I am. Whatever the investor is doing, they're probably using these things and trying to expose them over time. Okay? So as you go farther in your learning, you become more astute in actually seeing these and having the confidence to trade and or invest when you see these potential setups. So I just want you to have them all in one sheet. Now, when we look at stocks at highs, right, what resource do we actually see? Well, it's going to be on the market watch again, right? Underneath the quotes, you could see it there. You could also see it on the charts where you actually have lines that are really showing you the 20 and the 55-day high. Now, I like that because if I ever wondered, is the stock making a brand new high? I don't really have to kind of wonder that. I could just kind of say, okay, I could put the day's high on there, 20 or 55-day high, and see the breakout right on the chart. I'll put that on in just a moment. What is the reason for this? Well, this might be kind of where it's breaking out, okay, breaking out of consolidation, okay? And if you make a higher high, remember this jargon, okay? If you make a higher high, highest likelihood is to make a higher low. You make a higher high, you make a higher low, this could equal a potential trend, okay? Now, let's go to the example of Starbucks, second trade example, okay? So, by the way, whether you're new, okay, maybe let's say Jane is kind of trading and investing for the house, you tell your husband Robert to watch this. And then Jane, hypothetical, if you say my daughter is 18, like my daughter is 17, but you decide, hey, I want to teach my kids or my 28-year-old kid, whatever, have them watch this. This is really going to kind of take away like years of just kind of saying what's really out there. And we're going to really just put it on one sheet and kind of give the idea of what are the setups, what order might they practice in learning this in, okay? And the biggest also thing is talking about the reason why. So in this next example, I want to go back and take a look at Starbucks, okay? Starbucks. Now, we talked about this one. We had a recent trade on this, okay? And if you look at Starbucks, now let's kind of go back to this example. Now, we could bring this up and we could say, James, I brought up, let's say, Starbucks, and let's just do this. You could see relative strength in different ways, okay? If I brought up relative strength and you said, James, I could look at this to the SPX, sure. If I looked at this compared to the SPX, Starbucks has been underperforming the SPX. Now, this kind of goes against some of the things we talk about to a degree because most of the things we look at are not going to be underneath the benchmark line, which is the red line. However, some people say, well, this might be something that's kind of moving closer to the benchmark. Fine. Talked about that, but that's a minority basis. If we looked at, let's say, not the index, but the sector, okay? How is it doing to the sector? Well, when we pull this up, what you're going to notice is whether we look at Starbucks, for some reason, I'm not getting the data. That's kind of weird. Not getting the data up until now, but I'm on the Paper Money simulated account. We'd like to see the data as far as where it is now. I don't know why it's doing that. It's kind of weird. So the biggest actually thing is when we go back, when I get missed charts like that, let me go back to this. I'll quickly put that on. So let's get that data till now so we can see the full picture. Okay, now I'm just going back and putting it. Let me kind of just see where it is on the SPX. Okay, so if we look on the SPX, it's what we thought. It's still underperforming. The red line is the benchmark. Okay, if I actually go back and say I don't want to look at the benchmark, I want to look at how is it doing compared to the group. Apply and click on OK. We can see the data up till now. It's still underperforming. Now remember, if you have a set amount of capital like most investors do, Most investors might say, James, I'm trying to find something that's at least performing in line with the benchmark, the index or the sector or the industry group. And then if I have some money left over, find minorities that might be like this. Because this has been underperforming for a while. Okay? Now, so this is not the majority. I think we got that clear. But let's say, for example, we're saying, look, on this stock, we're kind of starting to break horizontal resistance. Now, on the right-hand side, we could also use some of the teaching we brought up before, which is, James, I see the shorter-term moving averages, the 10 and the 20 period moving average go green as well. Okay, so if you get a breakout, could you have relative strength? Could you have price above 10? Could you have the moving averages go green? The answer is yes, 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 yes. If it goes strongly bullish, most any indicator you use is going to be green. Okay? If that stock goes crashing down like SMCI, pretty much any indicator you're going to use is going to be showing red. Okay? Now what we're going to do is we're going to right click on this, buy custom, and I'm going to go with stop. Does every trade we have, does it have to have a target? Not necessarily, okay? But if, for example, we said we want to try to get long this stock, bullish in other words, and then set a stop below that 96.41-ish area, that's going to be 94.21. 94.21, day to GTC. Now, I'm not going to take the kind of, I think we could do 100 shares easy on this. This can be long the shares at this price or less with a stop at that price or lower. Okay? So trade 3. Okay, so what was the first trade we did? What was the first trade we did? What was it? Berkshire Hathaway. Okay? And then what was trade 2? And then, now, by the way, I think I'm trying to remember, are we on 2 or 3? I think we could be on 2. Check me if I'm wrong on that. Okay? We know we did Berkshire Hathaway, and then we know for sure we did Autodesk. And the way we could verify that is we had a canceled order. Let's kind of see what this is. Now, it was Berkshire. So this is trade 2. Okay? And I just double checked that. Yep. Now, the one thing I want to do is I also want to go back to this. So trade 2, okay? Starbucks, confirm send the order, okay? Remember how that stop order works. Now, one thing I want to do kind of before we kind of talk about these resources, when we talk about number 6, a potential entry signals that the investor should probably know about is channels. And this could be horizontal, okay? Horizontal or diagonal. Now, if you watch any of the things we talk about channels a lot. You could say that channels are just a variation of these breakouts. Now, sometimes when you get, let's say, breakouts, it could just be the stock is at a brand new high, which many are, okay? But I'm going to say stocks at highs and breakouts are the same. I'm going to segment, though, channels being differently. This could be some neutral range bound, and I'm going to label this as maybe neutral trading ranges. Why do people like to do that? Well, that kind of goes back to buy low, sell high. How do you find those? This is where it comes to visually looking at list. So each day we look at the Dow 30, S&P 100, and the NASDAQ 100. We visually put our eyeballs on all of them, about 200 stocks. And we visually look at which stocks might be showing that range. The reason is this kind of becomes trading potential, okay? Trading potential, back and forth in a range. And if it breaks out of that range, then it's kind of swinging back into that more classic breakout. But these channels can, if you like to trade, okay, they kind of might give you some short-term opportunity in some to complement potentially other things as well. Now, the other one is flags, okay? And we're talking about, I'm going to label this as bull flags. Here we're talking about the price pattern. You kind of think about bull flags, what really are they? They are just short, for the most part, for how we use them, is short-term bullish breakouts. They are a continuation of prior trend. And if we kind of said, what type of trend are we probably going to have in that case? It's probably going to be trend number 3. So if you actually get a breakout, you probably pretty much actually have price above that 10 and 20 or 30 period moving average. The resource is we have the flag script right on the market watch. So if you said, I'm learning this and I don't know how to actually find, like, how would I be able to find that? Well, if you go right to, for example, my X page, which I'll post here, Barbara has a page as well. You're going to see that one of the scripts we actually have, scripts not guaranteed for accuracy, but in terms of, let's say, flags, there's the flag script right there. So if someone said, I want to try to specialize in flags, bullish or bearish, that's the script right there. Now, why does the investor want to learn about different entry setups? Well, kind of like a tennis player who can hit different shots. Think about a quarterback that can throw at different arm angles like Patrick Mahomes. It kind of makes it where you're comfortable with different setups. And the more comfortable you are with different setups, the more likely you might be trying to expose that trend and capturing that trend. Okay? Now, the reason for that is kind of what we're trying to do is we're trying to get in that, we're trying to re-ride, okay, short-term momentum. Now, here's the deal. Could you trade that, for example? Could it be a longer-term bull flag? The answer is yes. Now, let me kind of finish this. The other thing that we would kind of also say is a break of support and firing back up. Now, I'm going to write the examples here. The SPX did this, and so did the IXE, the energy sector. What we're saying is if you see a stock break support, and you're thinking it should go lower, and just days right after, it fires back right above where it broke down from, and it shoots to the upside. That is a potential entry setup. That is an indicator where the investor might say that is a very strong likelihood that that stock could fire back to the upside. What type of trend is that? It's most likely trend 3. The resource, you have to visually look at those on your list. The trading potential this is more short-term to intermediate. And if you see that, and this is the major point, if investors are buying below support, there's only one good reason why somebody is buying below support, okay? And if someone is buying below support, they think they have enough ammunition of capital to knock it higher, okay, and push it back up. And that first time they buy maybe below that support level, that probably will not be maybe the only time perhaps. That's typically viewed as a very strong setup. Stock breaks support, or the index or the sector breaks the support for just 2-3 days, and then it fires back to the upside, okay? Like the breakdown never happened. Okay, I'm going to wrap this up here. If I kind of said like 9, I will label this as W patterns, and I'm just going to kind of put the potential entry setup, and the 10 golden, we'll call them the 10 golden entry potential setups, and I'm going to label this as V patterns, okay? And when we look at, let's say, V patterns, these are stocks. The whole idea behind, let's say, V patterns is they say that stocks fall down very quickly. They take the elevator shaft down and the stairs back up. The whole idea behind a V pattern is if it goes back up as fast as it went down, someone's thinking that actually that movement might have been not warranted, and they're trying to take advantage of that short-term price collapse by snatching back up the price. When we talk about W patterns, we're talking about double bottoms, slanted down, lower lows, and tilted up, higher lows. So if I was kind of getting started back again in 1996, right in Bowling Green, Kentucky, where I did, okay, right on Scottsville Road, okay, some of you know where that is. the biggest actually thing is I'd be thinking, geez, I wish I would know about these 10 potential entry setups. And the reason why we ordered these, okay, the reason why we did, do not feel like, geez, I have to focus on V patterns right at the beginning. But over your life of learning, you should know what that is. If I said to you, hey, look, the market has sold off, or the stock has, and we are starting to see W patterns, you should know how that could become an indicator for you to see a setup. If you said, hey, I saw this stock break support, and now it's going back up above where it broke down from, you should be comfortable to say, that is one of the 10 setups that the investor could be looking for to see a reversal. If you said, James, I see a channel, the investor should be comfortable to trade that channel and or the breakout. So we list these in order of kind of where the investor could start and try to hone their expertise, okay? We did 2 trades here today, but that's really what I wanted to cover today and kind of talk about kind of creating some focus of what you're looking for. Because the bottom line is the market could go up a lot, but unless you're comfortable with what you're seeing, you don't ever really get in, okay? So I'm out of my time here today. Stay tuned for Michael Fairborn coming up next. Thank you, Barbara, for answering those questions in chat. There is a survey in the chat. If you could fill that out, I would appreciate that. Hopefully you saw some value today in our session, which has been recorded. Remember, with what we discussed, it was done for example, illustrative purposes only. And this has been the class on trading with technical indicators. Your homework assignment is to go out there and practice looking for these 10 setups and be honest with yourself. Where do you feel like you are? If you say, James, I feel very comfortable with 1, 2, and 3, I'm going to go to 4. You say, James, I'm very comfortable with the first 6, then go to 7, okay? Try to create really a routine of finding these examples. And I'm going to tell you, the more you are comfortable with those different type of setups, the more you could try to expose and take advantage of what is in the market. That's the beauty of it, okay? Now, with that said, stay tuned for Michael Fairborn coming up next. Thank you so much. Take care. Bye-bye.